Welcome to Trading Lounge and the gold silver dollar yield report for Wednesday the 18th of August, and we're looking at the silver charts here, and it's possible to count this down as 1 and 2 and 3 and 4 and 5 here, and having a low in place. It doesn't count very nicely in this first move down here as wave 1 and 2, so it could throw the count out a little bit, and we could end up quite easily having another low, two lows coming in here based on that point. So we'll need to just give this a little bit of time here, and then I'll have a look at it to see if it's corrective or impulsive. The gold market, which we'll have a look at now, we're looking at it in two ways, as you may know. We're looking at it as an A, B, C, D and E wave here for wave 4. It's also possible, a bit of a long shot, but we'll see how it goes, of having wave 4 in here, and that would be considering wave B here and wave C here as 1 and 2 and 3 and 4 and 5 here. Bit of a long shot, but it does fit okay, but we would need to see an impulse wave up here, and as you know, an impulse wave is 5 waves, and currently we only have 3 waves up here. So I'm going to cut into the chase here and just go straight to the tick chart and bring in some data here so we can look at this situation. I might just clean this up while I'm in here. Don't need some of this. Don't need these. Just need the shell. Anyway, so from wave C low here, we can look at it as wave 1 or wave A, and wave 2 or wave B here. So what we've been doing during the week, as you may know, we've been looking at the move up here as wave 1 and 2, and then we counted 1 and 2 and 3 and 4, and then 1, 2, 3, 4, 5. So we've worked all the way through that for wave 3, and then wave 4, and then wave 5 here as 1 and 2 and 3 and 4 and 5. Well, I need to talk about that in a moment, but what I also wanted to point out here too is we've got wave 1 in play here, and then wave 3 expands as you would expect it to expand in range, and then wave 5 here is really expanding in range, you know, so that's telling me that, well, this could be really quite bullish. But the takeaway here is that we've got wave 1 here and 2 here. If we get, let's just play this out for a moment, let's say that we get this as a wave 3 and then a wave 4 and a wave 5, then we would have an impulse wave to the upside, okay? So the good news about that, if we got an impulse wave of 1, 2, 3, 4 and 5 up here, well then we would have a correction as an A and a B and a C wave, and then we would have another 5 waves up, you know, quite a long way up based on this here, but we don't have 5 waves yet, okay? But that could be the place to look at this here. Now in this last 5th wave, I was just looking at it and it's a little bit dodgy, so I've counted all of these. I feel like I've counted everything sort of correctly, but when I get to here, I'm just a bit short here because I can count from here. We should be looking for 5 waves up, unless we've got, I mean, it's just a bit weird. I mean, from here to here, that little section, could look at that as 1 and 2 here, then 1 and 2 and 1, 2, 3, 4, 5 for 3rd wave, 4th wave and 5th wave. So that would be here as 1 and 2 and 1, 2, 3, 4, 5 for the 3rd wave. Okay, I know it fits 4th wave, I guess, to here, then 1, 2, 3, 4, 5. I just want to double check that again because I looked at it before and it didn't jump out at me, you know. That one's got 1, 2. A bit dodgy, but I think we could work with that. Okay, we'll see. Anyway, we'll just see. We'll just jump out of here before. So this move here, let's just see where the top is for this. That top. But it really should be that top, I think. Let's just have a closer look at this structure here. That high there, straight down to there, look very sharp, doesn't it? So it's like a C wave. So we'll look at this as an A and a B and a C wave, and we'll take it from that point there. Oh yeah, that's okay. Yeah, we'll take it from there. That's all good. So what have we got here? We've got this 1 and 2, maybe a third wave here, but that doesn't really leave 5 here. That's 1, 2, 3, 4, 5. So that finishes on the low. So we could look at that as a nice third wave here, fourth wave and fifth wave. So we probably have to look at all of that as wave 1 there, but it's rather messy. So that looks a bit impulsive to the downside, but it's not a very good fit as such. This move here looks like it's in 3 waves. So we may have an A and a B and a C wave here, but we still need, even though it's at the 61.8%, we'd still need to see a 4, 5 to finish off here as 1, 2, 3, 4, 5 to finish off. So we'll just give that, we'll just give it a bit more, because I want to see if that's the actual wave 5. We don't have to make any decisions yet. We're not missing anything here just yet, okay? So don't feel like that. We're just, because we don't know, that's okay. So, yeah, that's either going to be the A wave up. Oh no, we'd have to put that, because it's at the 61.8%, we'll have to call that an ABC for the D wave at that point. So I'm going to move that out of the way. We're looking for a wave 4 there too. We'll see how we go with a wave 4, but let's. So we can take this away, and that one away for the time being. Let's put them over here. So that leaves us, because this at the 1800 here, which is going to be a resistance, of course. We were looking for, for the D wave up here in 3 waves to the 61.8%. So it's kind of there. So it's a good contender for that particular structure. We'll put that as the primary situation there, as an A and a B and a C. It means that I'll need to upgrade these to blue, but we'll do that later. It doesn't matter. But I still just want to put that as a notation there, and one here as well. And that will be 3 there. So we could have wave D here. Now the problem is that we can have wave 4. So wave 4 would be from wave 2 low to here, and that would be the 38.2% retracement level. So I don't know if that's going to come down there yet, but if that pushes up there, then we'll have 5 waves to the upside. So that will be interesting at that point. And that could be wave 1 or wave A at that point. I'll just move these out of the way. For wave E here, we would need to see wave A, B, and C here. Remove that. Don't need that. So we're left with 2 counts. Don't really need those there for the time being. So we're going to have something like this. We're either going to come down to this here further, to this A, B, and C wave here for the E wave, and then move off. But if we get 5 waves up here, then we'll get an ABC pattern here. So I think we just need to wait to see what we get here, if we're going from wave C to D to E for wave 4 and then moving up, or we get the 5 waves up. I mean, we've come up pretty high here, so it's possible, if we were looking from this high down to here, that's the 61.8% here. So if we were looking for further downside here, then it should have really occurred there at the 61.8% at tops. And really, technically, I mean, if we're looking, more so, it would have been at the 40% rather than the 60%. So because it's gone so high, and I mean, I wasn't looking for this anyway, but people that were looking for a more bearish move it should have come from from either the 40% or the 60%. You know what I mean? But either way, we're just gathering at this stage, hunting and gathering. So we'll just chill and we'll see what we get here first. We noted that when this first move came up here, we go, oh, that's good. We've got 5 waves up there. So then we look for the 3 waves back, which we got, and then we're looking for 5 waves up. So we've got that as well. And I think one of the things to talk about in here is the expanding range, because wave 1 is what it is. Wave 3 would be, that's quite big for wave 3, but it's okay, And then wave 5 here is expanding. Commodities do expand in the 5th wave, but at the same time, I can see an extending range here. As I talked in my Australian video this morning, touched on gold, I talked about a gentleman that was talking about the Basel III agreement that happened after the GFC back in 2008. And they discussed it, I think it was in 2015, where they brought in this law that's kicking in. I think the US have just kicked in now with it. Europe's kicking in with it. I think the UK, because they're big on the metals, they will do it on January the 2nd. And in a bit of a nutshell, it's an agreement clamping down on the banks' leverage in derivatives. And that also brings them into the gold derivative market as well, because I don't know the number. In my mind, I've got $27 billion, but I don't know where I got that from. But so there's banks there that have to get and this is what this spike was about here. So it was people trying to clear out their derivatives. Now they're stuck there with these short positions, like a massive short positions, these banks. And by law, by banking regulation, they have to move out of those positions. How they move out, it's only going to spike the market, isn't it? So anyway, what I'll do is I'll put, when I pop the video onto TradingLounge.com, I'll put a video in there where the gentleman's talking about this, so you can have a good idea about what he's talking about, rather than me trying to just rehash, YouTube information, so to speak. But I'll put it there for Trading Lounge members, and you can listen to it for yourself. And it's pretty exciting. So apart from waffling on about that, I will go and have a look at other interesting things coming up. We're going to have a look at the yields and the dollar. This is just GDX here. It does appear that we're going to be coming down further with GDX here, or we may end up with some sort of same thing with gold or something, because this move here, I was never happy. It looks like 5 waves, but I could never get 5 waves out of this little move here. You could, but it was kind of bending, it didn't sort of look right at that point. So, obviously, everybody will double XY, that sort of situation. But anyway, an A wave here, B wave here, we go down for the C, or we go into a triangle pattern within this space as well. A bit early to tell for that, but that doesn't really interest me that much. I want to go to the yields first. So one of the things on the yields here, this is the bonds here, so daily chart, yada, yada, yada. So what I was thinking is that we've had this rally here, right, as an A and a B and a C wave. Now, I've got it as an A wave here, and I was looking for the B wave to come down, this little blue B wave here, and then go up for the C wave here. Now, I don't know if that's going to go up for the C wave to this wave 4, which would be about right here for that, right? So I just need to gather evidence for this as well. So that means that we've got this first move down here, which I've got as wave A, and then an A and a B and a C for the B wave in orange there. And then from B down to C, we'll need to this B here, we will need, in this C wave here, we'll need 5 waves. So that's what I've been tracking. So the little green ones in here make up 5 waves for this minute 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 for the third wave here, then an A and a B and a C for the fourth wave, and then down for the fifth wave. Now once we get to the fifth wave here, we will hit 1 and we will bounce off that. It's just natural to do that. But then we need to see two things can occur here. We can either that would be an ABC at that point, and we can go up to wave C at that point, or we could go into a more bearish picture, and a bearish picture would make this wave 5 here, or that wave C, that would make that wave 3 at that point. And as wave 3, we would come back up to the 38. We'll either go up there, or we'll come back up to the 38.2% retracement level, somewhere in that, can I draw from that space? Somewhere in that space there, probably a bit lower, and then have wave 5 down. Now, if we get the fifth wave down here, that means that we'll have 5 waves coming down from the top. That means we'll have 3 going up to the A wave, 5 coming down here, and then that would make us here have an A and a B and a C wave back up to the 50-60% mark, and then go down again from there. So the reality is that we need to see, and it's going to take a little while yet, we need to see if we're going to get 5 waves down or just 3 waves down, and that will give us the next major trend in that way. Okay, what I want to do now is just cut through to the 2-hour chart should do, and pick it up from this from this situation here. So we've got wave 3 down here, and we had the A wave and the B wave, and as I said, we couldn't get 5 waves out of that coming down here. So I thought, okay, well, here we go, we'll go back up to the fourth wave or 1 lesser degree. So off we go, counting again, you know. So that's all cool. And then we've got this, it looks like now that we've been working on this, of course, but it looks like we've got 5 waves down here. Probably need to double check that on on more of an intraday basis, but that 5 waves there, that should give us 3 waves back up, and then we'll be on our 5 waves down here. We should be on our 5 waves down here. That's what I'm saying about this situation. So yeah, that's sort of where we are at this stage with this. I mean, it could turn into an A and a B and a C wave and then go up, but I think we're on the right track here for this. So that's interesting. So this could rally back up from that top to that low here, rally back up 50-60% to the 1.3, do a little dance at the 1.3 or something, and then drop from that point. So we'll keep an eye on that. And the US dollar as well. I might just go to the 4-hour chart first and then come back to this 2-hour chart, because I want to fit in, let's just squash this up a little bit. So this is the opposite of, well, I'm in Australia, so I'll say the Australian dollar. So this is also the opposite of copper, iron ore, all those sorts of things. So obviously it affects the commodity market. Australia is a commodity dollar. So, but yeah, as I've always said, this move up here is in 3 waves. So whatever happens after this, it's always going to be part of that corrective pattern there. So wave 3 here with an A wave, a B wave, and a C wave here. So we're pretty close here now. So we've got 1 and 2 and 3 and 4. We had to make an adjustment there, and then over the last sort of week or so, we've been looking for this to pull back to that wave 4 over here, and then we looked at this as being 1 and 2 here and 3 here, and then we started to come down, and we only got 3 waves here, so that was good. And then we've pushed up here, so now we need to get 5 waves up here. We're not done yet. There'll be a 1 and 2 and 1 and 2 in here, and that's the third wave. So there'll be a 3, 4 and a 3, no, 4, a little bit more to go up here, some 4s and 5s, a little series of 4s and 5s to get to the 5 of C of 4. And I was thinking that this would be very close to the S&P 500 topping out, and the NASI and that coming into the Jackson Hole event next week. Now the market could fall on the Monday after that, which would be the 31st or the 1st of September, or the market could get a bit jittery going into the Friday, because they're meeting at Jackson Hole's on the Thursday and the Friday. I mean, it could get jittery even a week before, I don't know, but it does appear that the S&P 500 could top out in intermediate wave 3, and this would leave this to top out as well, and the other things to top out. You know, the Feds were pretty clear on saying that they would not, you know, do anything until next year in terms of the tapering, but well, you know, I don't know. I mean, it's not my field of expertise about reading between the lines of, you know, what side of the bed Yellen sleeps on. So we'll see. But anyway, as far as Pat and Pete goes, we're just looking for 5 waves up here, and then we'll see if we get our turn down into wave 1, 2, and 3 down in that way. Alrighty, I'll leave it at that. Thanks for tuning in. Alrighty, cheers.